Okay, sorry, I know it's a little bit small, guys. But basically, these are our CRJs and CJs, Creditors Journal, and the CPJ. So, in the Creditors Journal, we had 4 invoices on the 1st, the 13th, the 1st, the 9th, the 13th, and the 22nd. Invoices 66 through to 69. Okay, we purchased from 3 of our creditors. We purchased from more suppliers, Sing Services, Zozo Wares, and again more suppliers. Remember, it's important that you have your folio column filled out. Okay, that information can be found either in the transaction list or the creditors ledgers itself. So if we scroll down to the 3 ledgers that we have, we see that more suppliers are C1, Sing Services are C2, and Zozo Wares are C3. Are we all happy with that? Okay. When we purchase from more suppliers, we buy 2 things from them. The first time, we buy trading stock worth 5,700 Rand and stationery for 400 Rand. We add those up. Creditors Control gets 6,100 Rand, 5,700 under trading stock, 400 under stationery. Okay. On the 9th, from Sing Services, we paid them 5,500 Rand in total, so that's what we have under Creditors Control. 4,700 was for trading stock, so we put it under that column. And then 800 Rand was for packing material. There's no column for packing material, so we go to sundry with the detailed packing material. On the 13th, we bought from Zozo Wares 9,200 Rand, and I think they tell us it was merchandise. Okay, we purchased merchandise on credit, invoice 68. So 9,200 Rand under Creditors Control and 9,200 Rand under trading stock. Everyone happy with that? Okay. Our final one, on the 22nd, we purchased equipment from more suppliers. So we put 5,200 Rand under Creditors Control and then 5,200 Rand under sundry with the detail equipment. Okay. Next, we had our cash payments journal. On the 2nd, we had 3 checks to all 3 of our creditors. We owe them money, so we are making either part payments, full settlements, or repayments. The first one was to Sing Services. We paid them back 5,200 Rand, so bank and creditors control. The second one was Zozo Wares, C3. Again, remember your C1, C2, C3. Zozo Wares, we pay them back 2,000 Rand, so it goes under bank and it goes under creditors control. More suppliers, 4,000 Rand under bank, 4,000 Rand under creditors control. Everyone happy with that? Okay. We then cash a check. Okay, I messed this up a little bit. Bear with me here, guys. Okay, on the 7th, we had a cash transaction with check number 58. They tell us 9,000 Rand was for wages and 4,600 Rand was for drawings. We've got 9,000 under sundry with wages and 4,600 Rand under sundry for drawings. Okay, our last 2, now that I need to redo them, we issued a check to Need Stationers. Okay, for stationery, 900 Rand. So we need to make sure that we don't make the same mistake I did. We skip one line. I think the date was the 20th. It would be check 59. Who are we paying? Need stationers. Okay. Sorry, stationers. The amount was 900. And we do have a column for stationery. Okay. And then our last one in this CPJ was on the 21st, we purchased from Dodo Distributors. Okay. Check number 60. Okay, the amount was 1,800 Rand, so we put that under bank and we put it under trading stock. We're all happy with that. Okay, now we can go in and total. Please can PWAR total bank, KG total creditors control, Ruby total sundry, please. In a second. Okay. Sundry Ruby. Spot on. That's 900. That is blank. That is 1,800. I need bank people. Like so. Everyone happy with that? And then KG. Creditors control. Wakey wakey bugger. 11,200. We're all happy with that? That's our totaling done and dusted. I just want to highlight them. Okay. Next, we moved on to our ledgers. Okay, our creditors ledgers. If we go in and we look at more suppliers first and foremost, we start off our accounts always with account rendered. Okay, balance brought down. We do not debit or credit anything, and the balance itself was 3,500. Okay. I've made a little note here. Because we're working with creditors being a liability, we have a minus because creditors or liabilities decrease on the debit side, and I've put in a plus here on the credit side because creditors as a liability would increase on the credit side, okay? It's just something little I do. It's a nice way to remember whether you're adding or subtracting from the balance and what we are looking at. So more suppliers on the first, we purchased more on credit from them. So invoice 66 is our detail. We in the CJ, we credit 6,100 Rand because we are purchasing more on credit, our liabilities increasing, and we add that to the balance to get a running total of 9,600 Rand. They then tell us on the 2nd of May, we paid them back part of what we owed them. Okay, so we use check number 57. From the CPJ, our liability is decreasing because we'll owe them less after this. So we debit 4,000 Rand and 9,600 Rand, the previous balance, minus 4,000 Rand should give us 5,600 Rand. Okay. We then had invoice 69. We purchased one more time on credit from them. Invoice 69 from the CJ, we credit 5,200 Rand because our liability is increasing, which leaves us with a total end balance of 10,800 Rand. The reason why I've highlighted it in yellow, that is the balance that we pull down to our creditors list to look like so. So at the start of next month, we owe more suppliers 10,800 Rand. Do you guys all see that? Okay. Creditor 2, C2, Sync Services. We start off again. Account rendered. All right. Brought down. We do not debit or credit anything. And at the start of May, we owed them 5,200 Rand. On the 2nd of May, check 55 told us that we settled our account in full. They didn't give you an amount, but they settled our account in full. We needed to go up to last month's creditors list. And if we look, we see that we owed Sing Services 5,200 Rand. Okay? If we in our CPJ, we did do 5,200 Rand, we go down to our creditors ledger, check number 55 from the CPJ. Our liability is decreasing because we now owe them less. We debit 5,200 Rand and there's a new balance of 0. Okay? You can write a 0 or maybe draw a dash. either or. All right, don't leave it blank. Show us that currently at the 2nd of May, we do not owe them anything further, and we don't have a credit. We don't have extra money with them. All right. Finally, on the 9th of May, we purchased again from them on credit. We used invoice 67 from the CJ. We credit 5,500, which adds to our balance because our liability is increasing, and that leaves us with a closing balance of 5,500 Rand. Again, it's highlighted. We need to pull that one down to our creditors list. At the start of next month, we owe Sing Services 5,500 Rand. Okay, and then finally, Zozo Wares, same thing, account rendered, brought down. We don't debit or credit anything. They give us a balance of 3,100 Rand. On the 2nd of May, we pay 2,000 Rand towards our credit. Our liability is decreasing because now we owe them less. We then debit 2,000 Rand. Our new balance would be 3,100 Rand minus 2,000 Rand, which should leave us with a running total of 1,100 Rand. On the 13th of May, we then purchased from them on credit again, and this was using invoice number 68. From the CJ, we credit 9,200 Rand because now we owe them 9,200 Rand more, and we have a closing balance there for the month at 10,300 Rand. Again, it's highlighted. We pull it down to the creditors list for the end of the month. At the start of next month, we owe more suppliers 10,800 Rand. We owe Sing Services 5,500 Rand, and we owe Zozo Wares 10,300 Rand. Everyone happy with that? Now, when we go down to the general ledger, okay, they've given us a few accounts here. We have equipment, trading stock, creditors control in our balance sheet section, and then stationery and packing materials in our nominal account section. Okay, they've given us balances. Okay, we've got equipment at 13, trading stock at 9,500, creditors control at 11,800, stationery at 900, and packing material at 700. For equipment, guys, do we start off with a balance or a total? A balance, debit side or credit side? Debit, okay. If we think of Dead Click or AE Oil, assets increase on the debit side. So we go in May the 1st, balance brought down, and the amount they gave us there was 13,000. Okay. Trading stock, asset, yeah. Okay. Do we open on the debit side or the credit side? Debit side. Okay, so we go again, May 1. Balance brought down. And what is the balance they give us? 9,500. Creditors control is a liability. Okay, liabilities increase on the credit side and decrease on the debit side. Do we balance or total? Balance. Cool, it's still in the balance sheet section. Debit side, credit side? Credit. Okay, so May the 1st. Balance brought down, and they give us 11,800. We're all happy with that? We then move on to stationery, balance of totals. Totals, okay, we're now in the nominal account section, so totals. Stationery is an expense. Our expenses increase on the debit side. So we'll have May the 1st, total, brought down, and what do they give us? 900 for stationery, and then for packing material, again, it's an expense. We open up on the debit side, we have total, brought down, and what balance do they give us, or what total do they give us? 700. Okay. If we go back up to equipment, right? What do you think would affect equipment? Bank. Okay, why bank? Do we purchase equipment at all? So let's go up to our CPJ. Okay, our creditors journal. You'll see that on the 22nd, we purchased equipment on credit, and there's nothing in the CPJ of equipment. Okay, if we purchase on credit, KG, are we putting in bank? Yes. Say? Creditors control. Remember, if we purchase equipment for cash, it would look like so. Right? From the CPJ. Here and now, though, there's nothing for cash. It is credit. Where do we find that transaction? In the CJ. The date that we had that transaction was the 22nd. The account we use when purchasing on credit, creditors control. Okay? Creditors control. Happy with that? Right? Now, what do we need to do? Okay, we add 5,200. We didn't sell any equipment. We didn't dispose of any equipment. So all we need to do now is balance the account. There's nothing on the credit side. So simply, all we need to do is total it. So that is 2. Okay, 13,000 plus 5,200. 18,200. Any questions? Are we all happy with that? Trading stock. Okay, usually we have stock coming in when we purchase it and stock going out when we sell it. Now, we haven't done a cash receipts journal. Sorry, I've been dealing with Greta at Solomon. We don't have a cash receipts journal, and we do not have a debtors journal. So we, in essence, haven't made any sales for cash or any sales for credit. So we don't really record any stock going out. Would you all agree? Okay? So the only thing that we can record is trading stock that we buy for cash and trading stock that we buy for credit. Okay? If we look, both of them have their own columns in the CJ and in the CPJ. So we can go down to the trading stock account. It's on the last day of the month. Does May have 31 or 30? 31. Okay? If we purchase for cash, what account are we using? That's the journal. What account are we using? People? KG? Someone said it? Bank. Okay. So bank from the CPJ. That represents us purchasing for cash. When we purchase on credit, we get that from the CJ. What's the account? Okay. Creditors control. So this is the complete opposite to debtors. When I say opposite, it's almost a mirror image of debtors, right? Now we purchase the trading stock for cash and we purchase trading stock for credit. If we go up and we look at the trading stock total in our CPJ, it is 1,800 Rand. So next to bank, you stick in 1,800 Rand. Okay, creditors control trading stock or creditors journal trading stock total column 19,600 Rand. So what this tells us is we purchased 1,800 Rand for cash worth of trading stock. And on credit, we purchased 19,600 Rand on credit, okay? In a normal world where we have a CRJ and a DJ, on the credit side, we would record the stock going out by having cost of sales from the DJ and cost of sales from the CRJ. Yeah? So usually we'd have cost of sales here, cost of sales here, and we'd need to balance it. Here, they haven't given us those two respective journals, so we actually don't know. Okay. What do we do now? We need to total. Okay, what does that give us, someone? How much? 30,900. Are we all in agreement there? Yeah, sounded like you hesitated there. Are we all happy? Okay. Creditors control. There's two things involved here in creditors control, right? What do you think there are? Obviously, we purchase on credit, so our liability increases, and then we pay back what we owe, so our liability decreases. So what do you guys think, and I know it's the first time we're seeing this, what do you guys think we do in creditors control? What would we record on the credit side? The CJ, okay, everything we've purchased on credit, right? What would we record on the debit side? Okay, our transactions from the CPJ, from the creditors control column, because that represents what we have paid back, okay? So if we go in on the last day of May, we go to our CJ and we look at our creditors control column. Okay, the total of that was 26,000 Rand. That represents everything that we have purchased for credit. So we owe our creditors 26,000 Rand more than we originally did. We're all happy with that. So you go in, we are pulling the information from the CJ. The amount is 26,000 Rand. What do you think the detail would be? Creditors control. Can we credit creditors control in the creditors control account? No. Okay. How do we do the bank account? We have total receipts and total payments, right? Here in creditors control, we have credit purchases. Okay, we're all happy with that. So that's when we purchase more on credit. Okay, from there we need to record how much we paid back. Okay, so let's have a look and see. If we pay back, we agreed that we use bank account. We would still do that on May the 31st. We would get bank from the CPJ. Whose phone's ringing? It's not mine. Awkward. Why don't you look at who it is? What if it's your mom or your dad? Could be urgent. Okay. In our CPJ, we have our creditors control column. Okay, this one. Okay, this is everything that we've paid back to our creditors in the month, right? So that is how much our liability would decrease by. Are we all happy with that? Now we pull this total figure of 11,200 Rand and we stick that into our ledger. 11,200 Rand. So our credit purchases is what we've purchased on credit. Our bank on the debit side is what we have paid back. Now, just like any other ledger account, we need to go in and balance that. Which side looks bigger, the debit side or credit side? Credit. So if we add 11,800 and 26,000, we should get 37,800. Are we all happy with that? Yeah? What do we do now? We pull that across here. Okay, so we take 37,800 across, and what do we need to do? We need to balance it to get our balance carried down. Okay, also on the 31st. How do we do that? We go 37,800 minus what? 11,200, which should give you 26,600. Are we all happy with that? 26,600. Now what do? We need to open our balance for the next month. The month after May is June. The first balance brought down, and it is 26,600 Rand. Are you guys all happy with that? Yes, no, maybe. Please ask if you're unsure. Because our liability, remember, we're working in the creditors control account. So if we look at AE oil, right? Assets increase on the debit side and decrease on the credit side. Expenses increase on the debit side, decrease on the credit side. Drawings will decrease owner's equity on the debit side. Capital would increase on the credit side. Incomes increase on the credit side. Liabilities increase on the credit side. They both decrease on the debit side. Creditors control is a liability, right? So it increases on the credit side and it decreases on the debit side. Now, if we look at that, if we don't buy on credit, do we have a liability? No. So every time we purchase on credit, our liability increases and therefore we debit it. Okay? Every time we pay our creditors back, because we're paying them back and now we owe them less, our liability decreases, which means that we debit it. If we had a bank account, Ketanu, now obviously here we've got bank on the debit side, right? Because creditors control is decreasing. If we had to look at the double entry principle and we had the bank account, you would have, and I'm just going to draw a T account on the side here. Okay, so this, imagine this is the bank account. Here, you'd have creditors control. Okay, with the same amount of 11,200, because bank in this instance, we've credited bank. Bank is decreasing because we've actually paid them the money. Do you see that? Okay, so it will be a lot easier when we have a bank account in the next activity. But do you see, we've got our double entry principle, we've got our equal, debit, and credit. Okay. Anyone else questions? So what's the 20 here. 26, I did erase 1 0. Okay, I'll go back there now. Sorry, my erase is quite... That one. It's 26,600. Okay. Questions? Nothing. Okay. Our last two accounts here, stationery and packing materials. Okay. We know we're in the nominal accounts. We add to that, have we purchased stationery, have we purchased packing materials? Now, we're not just purchasing for cash, we're purchasing for credit. Okay. Let's go up to the CJ. Do we have stationery in the CJ? Yes. Okay, so we add that in. It's 400 on the first. Okay, where are we pulling the information from? The CJ, and it was 400 Rand. What is our detail? Okay, usually if we purchase on for cash, it would be bank. Now we're purchasing on credit, so what do you think it would be? Creditors control, good. Creditors control, happiness. Okay, do we purchase any stationery for cash? Let's go up and have a look. We do on the 20th. Stationery does have its own column, so we can put it in on the last day of the month. So on the 31st, sorry, that can also be the 31st. Okay, we purchased 900 Rand worth of stationery. We're getting that information from the CPJ. What would our detail be? Bank, okay, because we buying it for cash. So now do you see how we record a cash purchase and a credit purchase? Right? Now all we need to do to end off that account is to total it. And that should be 900 plus 900 plus 400, which should give you 2,200. Okay. Finally, our packing materials account. If we go up to our CJ and have a look, do we have packing materials on credit? Yes, okay. 800 bucks. Invoice number 9, or invoice number 67 on the 9th. Okay. Packing materials, does it have its own column? No. Okay. So what is the date that we put in? Okay, we have to put in the 9th. Remember, we only put in the end of the month if the item has its own column. All right? Once we put in the 9th, what are we putting? Are we purchasing it for cash or for credit? Credit. So do we put bank or creditors control? Creditors control. Okay. Which journal are we getting that from? The CJ. And what was the amount? 800. All we need to do there is total, which should give us 1,500. Is everyone happy with that? Okay. Any questions at all? Please shoot. If you're not sure, ask me. Nothing. Something. Nothing. Okay. You guys are enthusiastic today. Next lesson, we start with combined consolidation of credit and cash transactions. Okay? I see a CRJ, I see a DJ, I see a CPJ, I see a CJ. Okay? So that is now looking at cash sales, credit sales, cash purchases, and credit purchases. So you'll need to determine whether it goes in the DJ, CRJ, CPJ, or CJ. All right. That's us for today, guys.